Well, gentlemen, we're back in beautiful Fort Worth, Texas to start the year and together as, love to spend time with you guys, but even more so this year, for our ResinSmart by RTI team meetings. It's been great to spend time with you guys. We've had some great weather here in Fort Worth, some great team building activities, and, it's an opportunity to be back in the podcast studio here in Fort Worth. Uh, just excellent to be here with you guys. You guys having a fun week so far?
Excellent. It's been great to get out of the Midwest so we can keep doing annual retreats down here in the winter anytime.
Maybe from like January 1st through, March 31st. I know Michigan.
Great time to be in Texas.
Fair enough. I couldn't agree more. And again, it's great to have you guys here. Beautiful opportunity to get together and talk about the market and plastics as we typically do with our clients. I think we could take the opportunity just to start the conversation around, what we're expecting the market to do this year. It's certainly been an interesting first, what are we, 13, 14 days into the year. There's been some activity, certainly with Venezuela. So a lot of noise out there that's, changing some of the forecasts we had kind of talked through with our clients. Uh, Brian, I mean, maybe I'll start with you. What are you seeing out there in terms of the market and big picture? What do you got your
So
eyes on?
overall, 2026, I think we'll see a lot of continuation from what we were seeing in 2025. Just a lot of weak demand out there going into not just the first half of the year, but trickling down into the second half of the year too. Just looking at a lot of forecasts based on industry. Obviously the big industries for resins, your food packaging, your medical, but I'm actually looking more at the real estate side of things, the housing, the construction sector, because it really seems for the past, 3 or 4 years that a lot of builders are just making that strong demand outlook for summertime. And we just really haven't seen that for the past few years. And, now we're starting to see interest rates come down, not just interest rates, but also mortgage rates, which are starting to follow that. So looking ahead, I mean, maybe we're due for maybe another one or two cuts in interest rates the first half of the year. If we see that, yeah, maybe that will, somehow trickle into mortgage rates. Maybe we'll see more consumers actually buying because really it just seems like that market has been, supported more by multifamily, more by, warehouses, data centers,
Sure.
a lot of that. So I'm paying attention more to that, but I do think it's overall going to be more of the same. Really, you look at Venezuela. Yes, it's only been the first half of January so far. We're barely 2 weeks in, the 15th coming up. Yeah, I mean that might have changed some forecasts. Not really, not by much though. It seems like that's more going to be a long term,
Right.
impact on the market because we haven't really seen you know not that much of an immediate impact. So, I mean, that's, obviously one black swan event, but look, we still have a full, 11 months left. So, you got your summertime, your peak season, you've got a lot, to look forward to when it comes to seasonal, impacts on this market.
I think that's really fair, Brian, and certainly when I think about Venezuela and it's not going to have a direct impact on the resin market. It's not like there's container loads of Venezuelan polyethylene that's waiting to be released into the country. Um, but certainly, it is that time of the year where producers take an opportunity to look for any reason to get their price up. And this is one of them, right? We've seen price increase letters referencing uncertainty, and certainly it's going to impact some of the
Yeah,
freight costs.
it's hard to hang your hat on justifying a price increase, especially in 2025. I mean, this is a perfect opportunity. Yeah, we'll probably get a lot more of these isolated events that, maybe the knee jerk reaction is, to hang an increase on something. But, really, I mean, just when you look at it as a whole, we're really not seeing that yet. I mean, look, you've got that demand coming in at the start of the year, but a lot of guys are already, you know, good in terms of their supply positions, especially coming in. I mean, you know, the last few months of the year is always kind of that seasonal slowdown. So everybody's trying to, wrap things up. But they were still sitting on a lot of inventory in the big markets that, Kevin, what you're covering in polyethylene there, Tyler, I mean, you're seeing that in PVC. I'm seeing that as well. You know, I mean, I'm going to go back to Venezuela, but I'm going to. I mean, it's not so much Venezuela. I'm more worried about what the impact may be with other Latin American countries.
Sure.
Especially Colombia, Brazil. I mean, those are two countries to look at. I mean, they're strong trading partners. I mean, especially when it comes to resin. So that's something maybe that we'll see some type of impact. Of course, the administration is talking a lot with making certain suggestions on what the market
Suggestions is
should.
one
Yeah,
word for
yeah.
it.
So
Yeah.
I mean, it'll be an interesting year when it comes to um, international trade with Latin America. Of course, you have look, you've got geopolitical events going on with Russia and Ukraine still. Middle East is always going to be, kind of
Powder keg.
spotty. I mean, something's always going to happen there, but Latin America is going to be really interesting to keep an eye on. So
Great stuff, Brian. I know price increases, right? I know there is one commodity that is we're talking about price increases with the market. And Kevin, do you want to maybe share a little bit on what you're seeing in polyethylene to start the year?
Yeah, I mean, when we look at polyethylene, there's market fundamentals, there's supply and demand. Suppliers, to Brian's comment, are they're cautiously optimistic, and I say cautiously because they would love to see the demand improve to justify an increase. Right now, I think the black swan is, what does this tax legislation mean that was passed last July? It seems like a lifetime ago. There's going to be some sort of impact. What does that mean? Does it raise the economic forecast? Does it stay relatively the same? So those are things that really are going to be something we're going to be looking at definitely in the first quarter to see if we start seeing the demand pull through with our processors on demand orders that they're seeing. Because really the risk of the supply chain, other than the events we see throughout the year, are not being ready to support the demand. And that's going to be out there. So I'm going to take a little bit to glass half full on that. And I'm going to be hopeful that we have a better year than last year in 2025. Not substantially, but I think a little bit better because of the stimulus that's going to be going into the economy. We will see if that transpires, but I think the second half of the first quarter is really going to be the indication whether we see that go through the remainder of the year.
We can always rely on you, Kevin, for the glass half full outlook, and that's one of the many reasons we love having you as part of the team. Tyler, I don't want to leave you out, man. It's been a little hectic start on the engineered materials front. You did a great video the other day on kind of what's happening with SABIC divesting their assets for polycarbonate. Anything? Yeah, what are you seeing out there? In addition to that, hit that even harder.
Well, one thing for 2026 that I think most procurement professionals haven't totally forgotten yet is like the tariff trauma, right? Like in 2025, there was a lot of scrambling over, what are the tariffs? How long are they going to last? How much are they going to whipsaw? Are they going to be refunded? There's a lot of uncertainty that I think globally was introduced. And I'm curious to know, businesses thrive in stability. So now that the tariffs have stopped being as volatile as they are, and they seem to be kind of re-baselined and now here to stay, what does that mean for manufacturing in America? Are those commitments that the companies made coming into fruition? Are we going to see a rebalance of where things are made and how much product is going into them? I think companies paused quite a lot of those manufacturing decisions. I'm not saying they stopped production, but I think they certainly had to change their investment and their longer term strategy. And we haven't seen that come into fruition yet. But I think as long as things stay about where they are, businesses will figure it out. And that tariff situation has led to some margin reductions for some international resin players, but that's sort of highlighted that there was margin to be reduced. So that made the domestic landscape somewhat more competitive. So we saw like overall a depression in pricing in engineered resins for 2025. And I think in 2026, now that things have stayed there, if demand can pick back up, we might see a little bit of a rebound on that price side. And then, yeah, of course, another driver would be, as you mentioned, SABIC divesting their ETP business to Mutores and Akita. Look, those are private equity firms. Mutores is a turnaround specialty operation. So 3 to 5 years, get in, make it more profitable, and then sell it. But let's remember, these are not chemical companies that have roots. I mean, we're in Texas right now, and you think about the Exxons of the world or the Dows, right? Like those guys are so vertically integrated that they practically pulling it oil right from the ground and then putting it all the way into, your watch, your clothes, whatever, right? So these PE guys, they're not that vertically integrated. And I don't think that they're going to find synergies among other parts of their business. I think that they're going to come in and raise prices, gain margin, test the waters, and see how nimble their customers really are for specifications of their resins. So I think that's something to be prepared for and to look out for in 26.
We've both been talking to some of our industry contacts, Tyler, and last year with the uncertainty with what was happening with Covestro and the merger with ADNOC, right? I know there were a lot of conversations around, well, what's that going to look like when it finally settles? And a lot of those Covestro folks were answering questions from clients around, well, what does this mean for me? And what does this mean for my price? I think the shoe's going to be a little bit on the other foot this year, where Covestro is going to be able to be a little bit more aggressive. We're going to see that play out domestically as well as in the international polycarbonate market.
I think so. Yeah, I think that it's an exciting time to see some of these disruptions if you're on the producer side, because as far as excitement goes, 2025 didn't have much for the producers. So
that's true.
Any big change is an opportunity to impact margin management.
I want to come back to polyethylene for a second, Kevin, and Brian, we'll give you the opportunity as well to weigh in on this. But, there are a lot of acronyms in this industry. One of our least favorite ones, especially from our clients, is NMAs, non-market adjustments. We're certainly hearing that that's going to be a dynamic that is in the market here in the next week or so, right? Maybe share a little bit more around what to expect there and what the outlook is and what people can be doing about it.
Yeah, for our audience, they may not fully understand non-market adjustments, especially in industries that are tied very closely to feedstocks and don't deviate from that much. So over time, we have a drift of pricing. The indices track pricing through a survey of large buyers of where the market is. Typically, there's some drift over 8 to 10 cents on average for polyethylene per year. They recalibrate to make sure that their indice properly reflects where resin is being bought and sold and traded. There's a lot of emphasis on where the spot market is, net transaction or low contract. They use different terms there. So it's really getting the indice down to where the price really should be and is in reality. The challenge for our processors when they're buying resin, they're tied to an index, especially if they buy a certain amount of quantity that's upsized, so they have some stability in where the pricing nominations are. If you're not tied to an index, you're beholden to pricing nominations. So it could be 3 cents, it could be 5 cents, sometimes 8 cents per month. They typically roll over month to month if they don't go through, and sometimes they do go through. Those pricing nominations stick to clients typically that are not tied to an indice. Those indices typically have a span of 2 to 3 years before they recalibrate. So during that amount of time, there's a lot of margin that the producers are gaining, and the processors are losing, not being able to purchase at the appropriate level to where the market really is trading. So non-market adjustment resets the baseline. Unfortunately, it causes a lot of friction in the industry between their end customers who they're selling products to, who their salespersons are getting some pushback from customers saying, well, I heard a non-market adjustment went through for 20 cents, so I expect my cost of goods sold for the material portion to go down by that percentage or that,
for that same number, right?
For that same number. And why am I not getting that? Because you've been overcharging me. And on the procurement side, they're talking to their resin supplier saying, hey, you've been taking advantage of me because I've been paying X and the market is at Y. So there's a delta there that we have not been able to make up for the past couple of years. So where are these discussions going to happen? And sometimes it has to happen at the end of the year, at contract time, or every 2 years, depending on the contract duration. The problem with that is that for that full 11 months before you have that contract for reset, you're overpaying. So a lot of our clients, we really encourage them to have those non-market adjustment discussions throughout the year, maybe every 6 months or so, depending on the market where it's at. So they minimize that drift that happens.
Brian, anything you wanted to add on to that? the opportunity.
It's gotten a bit more commonplace for non-market adjustments, which is really interesting because, you go back 20 years ago, non-market adjustments were very rare and they were pretty frowned upon because there's a lot of investigation in going back and you're looking at pricing history just to see kind of where you got it wrong. And that's the thing. It's not that you got it wrong or anything. It's just over time, look, when you're an indice and you're assessing based off of methodology and you have to be within a certain range. Yeah, over time, if you're following a delta, a monthly delta, you're gonna get a price range that's out of whack. Like you were saying, there's maybe 8 to 10 cents over a given time frame. So, it is very difficult. And, being that I was in that position where I've had to look at non-market adjustment at one time. It's like, well, where exactly did this, kind of sway? And it's not like anybody was wrong. It's just, look, not every buyer, not every supplier, not every distributor adheres to a methodology because look, a methodology on an indice, that's great that you're abiding by something and you're very consistent to assess a price, whether you're, whichever indice, whether you're a CDI or CMA, an Argus or an Opus or someone like that. But you know, the reality is, a lot of the market doesn't live within that indice or within that methodology because markets are so dynamic. Where if you're a small buyer, a mid-sized buyer, a large buyer, sometimes it's impossible to operate within a methodology if you're tied to an index. Basically, looking ahead, I mean, a lot of these indices will probably figure something out where you can minimize a non-market adjustment. I mean, that's the only thing really I could point to is that indices will have to find some way to minimize that looking ahead.
I want to add on to that point, Brian, because I think one of the things that's overlooked is the overcapacity that we have in North America and abroad. And because approximately 50% of PE is exported, the producers have to sell this resin at certain points. So you have more resin that goes to the spot market if they can't ship it, sell it on the contract, and it's going to be at a lower price to supply the market. In the export market, they may have to sell it at lower margins, again, just to sell this capacity that is in demand. And because globally, most of the economies have had some struggles in the last couple of years, you have an oversupply and economic conditions have not been conducive enough to consume that demand. Now that will change in the future. They built especially in China, a specific region because of future forecasts. But for right now, it is going to be very challenging in the next couple of years for the suppliers due to the fact they've built capacity. And that will still have those challenging discussions of where the market really is selling at because the spot market has become a major factor in what people are buying.
And if you are listening to this conversation and you find yourself still a little bit confused about how non-market adjustments are going to impact you, that is what we do at ResinSmart by RTI is help you figure that out and then develop a plan to action upon. So there are things that you can do to address the situation. We're here to help you. Tyler, I wanted to ask you a question. Obviously, you've been a big buyer at some fairly large plastics companies, Amcor, Cardinal Health. As you're looking at the market, again, putting yourself very easily in the buyer's shoes, what are some of the things that you're thinking about this year? You mentioned the tariff situation seems to have abated. What are the other items that, you're kind of thinking about as we move into 2026?
Yeah, good question. I guess I would say that a lot of the heartburn I think that buyers are going to have in 2026 is that like the resin prices went down in 2025 in a lot of cases to like historic lows, pre-COVID lows, right? And the market did that work for you, right? So depending on your own organization's, particularly your finance team partners' ability to keep score, right? Like how your finance department measures your procurement activity is going to be, I think, a big conversation in 2026 because they're gonna ask, well, Tyler, what money did you save us? You had $1 million target. Did you hit it? And I'm going to have to scramble to say, well, no, we saved a lot of money in 2025. The markets are very low. We've gone out. We've tried to reduce price based on a formula, perhaps, right? Like another index minus price or an index with a lower adder that you're negotiating. But I think finance is going to be looking at resin and say, hey, resin looks great. Our cost of goods sold are down. And did procurement do anything to push those savings? Maybe, maybe not. It's pretty tight out there, but the market did a lot of that work for you. So I would be really precise at looking at what are the actions that I've taken to drive value and what have the markets done to get us into this advantaged position, and be ready to tell that story and defend those actions.
It feels a little bit like, to me, when I was on the sales side, on the resin sales side, post-COVID, where a lot of folks, myself included, were hitting our sales targets because demand bounced back so quickly.
Yeah.
And our CFO-driven company was, I know, a little bit reluctant to pay some of those bonus checks when, to your point, the market did a lot of that activity for you. So there's going to be an element of, what have you done for me procurement-wise lately?
So I want to add
Please,
on to
Kevin.
that. That's a really good point, Tyler. During this low portion of where people are closer to the baseline than they have been in previous years, one of the most important activities is doing the work to dual source, because it will go up. And if you don't do it now and you do it later on, you're losing the benefit of having the leverage between now and when it escalates. So doing the pre-work to qualify a secondary vendor, sometimes it's not that easy. But if you never do the work or you wait till it's too late, then it's going to cost you money. You're going to lose savings in the meantime.
It's not a groundbreaking insight to say that if you qualify alternates, you gain leverage, right? But that is it. It is the golden ticket. In my resin career, I've been fortunate enough to work with some really strong teams that were collaborative and were able to petition for the resources to qualify alternates. And without doubt, I can tell you that qualifying alternates and actually moving to them is made up, 75% of a multi-million-dollar pipeline that I've delivered over my career. So I totally agree with you, like emphatically, Kevin, that, it's interesting, like when Winter Storm Uri happened back in the day, when you were cashing those checks that were kind of hard to carry to the bank.
Hard to carry. They
I don't
were
know
very heavy.
I don't know if they wrote them on the big cardboard checks or not.
Big cardboard checks, just like the game show style. That was
Right.
That was how they did it.
That's what I thought. So, one of the things about,
I just can't get that picture out of my head now.
No, yeah, I know. So one of the things is, like, when resin prices skyrocketed and the margins went way up, that's when people started to cry uncle and try to search for alternates. But guess what? You're not the only customer looking for an alternate. I'm sure you, as a salesperson, were fielding a ton of calls when there was urgency around it. And then you have to, as the salesperson and as a company, say, hey, we've got a bunch of leads that we didn't have before. Maybe, buyer, hey, you're buyer number 8 on this list. Like, we'll get it to you when we can, but we've got some other qualifications that take priority, right? So in urgency, you're competing against everybody. So if you can qualify alternates in this low time where you're reaping the financial benefit of low resin prices and using some of that to reinvest in the business and qualify alternates, I mean, salespeople could not be more excited about an opportunity to gain market share than they are in this environment. So with you making that call in this environment, I mean, you're the cat's meow to them today. And later, when resin markets get disrupted and things go crazy again and the phones start ringing, you're already too late.
We've already seen a lot of change, not only in, what companies are prioritizing here into 2026 on the supply side. We've unfortunately seen, folks leaving organizations, people having to make fairly tough decisions on cuts within organizations. You're exactly right. All these guys are hungry. They missed their number on both the top line and the bottom line. And so they're going to be very hungry to pick up those programs. And it's not just, doesn't have to be the top SKUs you have. It's your tail for a particular supplier might be very big volume for them, right? So, just one thing I would add on to that, it doesn't have to be your number 1 through 5 SKUs. Don't forget about that tail that can be meaningful.
And to your point, Michael, sometimes you forget about the tail all the time when things are good, but times are relatively flat. That's the time where working on the tail that hasn't been looked at from visibility standpoint is probably the best. Because if it's relatively flat, There's probably not a lot of acceleration of sales, so you have time to kind of work on that in a slow, methodical passion.
And good resin buyers and good companies as a whole, I would say they task your resin buyer. Yes, of course, number 1, 2, and 3 is lower my price. But what they ask of you seems to change on a dime, where one day they're saying lower my price, and then the next day they're saying lower my risk. Right? Actually, we want more money in the bank. Increase my payment terms.
Yeah.
Right? So
Oh yeah.
so it's like, while the prices are low, I think a lot of the quality resin buyers out there are shifting their focus to risk mitigation,
Yep.
payment term optimization. And it's a great time to be a resin buyer, one, because the market is depressed, but also with producers being so eager to make deals, it's a much better time to talk about payment terms or contractual commitments or volume commitments, or maybe some creative purchasing initiatives that before would just get flatly struck down because we have other customers that this is the standard, procedure. We'll just sign them up. We don't need your creativity coming in here and, messing things up on our side. So right now, with the leverage that buyers have, it's the time to be getting creative and maybe making some really quality agreements that can service you through whatever's coming next.
Absolutely. Any thoughts on that, Brian?
I think he pretty much said it all right there. So yeah, that's
I guess, Brian, as you have this conversation, we think through some of the other potential risks that are out there. We talked about the tariff situation, which has calmed down. We talked about some of the geopolitical events. You're our RTI or ResinSmart by RTI weather guy. Any insights as to what we're seeing with respect to, we mentioned the cold weather here in Texas. It hasn't been that bad up on the north side, but you're down in Houston. I guess, what do you have your eyes on in terms of weather, both in the near term as well as, I know it's a little early to talk about hurricane season, but just what are you thinking there?
I mean, those are the two real threats. It's always going to be the threat of, another winter storm, another Texas freeze, or hurricane season. So 2025, the expectation was for an above average hurricane season. We technically got that. You didn't feel that.
No landfall, right?
You didn't feel that in the Gulf Coast. So I mean, thankfully down in the Houston area, we were spared from severe weather. That's making a couple years in a row now. I mean, we did have a Hurricane Beryl, which was really odd because it was quick and isolated, but the recovery was a lot better compared to previous hurricanes. This time around, you always still have to factor that in. I mean, it still has to be something that if you're planning your resin spend or if you're planning just, on your forecast, you still have to factor in a hurricane season. You still have to factor in, a potential winter related threat. That's really commonplace. So, I mean, really, there's no new thoughts on that. It's more, look, just be prepared. I mean, it's really business as usual if you're taking into account a weather-related threat like a hurricane or a winter storm. Now, of course, tornadoes are always a big thing in
Bigger
Texas
thing
too.
here
I
on the
mean,
north side.
so that's something that could pop up any time of the year. Really, it just should be business as usual when you're making that weather-related assessment and just factoring that into your planning.
We're going to continue to keep our eyes on it. I know you will down in Houston, Brian. So stay tuned with us as we progress through the year. With interest rates falling, one of the things that we've been seeing increase in plastics over the last few months has been activity. Private equity has become more active. I mean, we just talked about the Covestro situation. They've certainly been more active on the plastic processor side. We saw some fairly large deals last year as well. And I'll tee this one up to you, Kevin. When we think about private equity and plastics, oftentimes, although resin can be 60, 70, 85% of the cost of goods sold, it can get oftentimes overlooked in that process, maybe both on the diligence side as well as after the transaction. What are some things that folks should be thinking about when, they're getting ready or either going into or coming out of a private equity event?
So, from the private equity standpoint, the analysis is not just looking at what the price movement has been. I think the comfort level and the recalibration of the relationships has to be looked at. There's legacy relationships in a lot of companies that get acquired, and sometimes they're very comfortable with where the price proposals have been over time, whereas sometimes there's a lot of money left on the table because the relationship has maybe been a legacy relationship. And I think that sometimes it becomes uncomfortable for the processor to maybe challenge their salesperson over and over and over, even though where the market is trading is at a lower level than probably where they're at. So I think they look at that. I think they look at other commodities as corrugated and other items as well. But those are ones that move the needle. If you could save on resin, you can save on corrugated, that goes a long way to kind of getting the return on investment that private equity is looking for. So challenge the relationships, understand what the relationships are, and make sure that there's alternates there if it's necessary.
I think one of the things that typically happens when somebody goes through that process is they engage with a consultant, right, to advise them on maybe something that they don't fully understand. And resins, let's face it, are a little bit complicated. Hence the reason why we're all here. I want to tee this one up to you, Tyler. I know it's near and dear to your heart. When they engage with a larger consultant, big C consulting firm, a lot of times they try to run the same play, another acronym, right? This one I think everybody's familiar with, the RFP process. People aren't always satisfied with the results of that, to say the very least. I want to talk a little bit about why that is, why people have those types of experiences, and maybe what can they do differently?
Yeah, I mean, when I was in business school, it was everybody in the room knew that if you're in procurement, you just figure out who sells whatever it is that you're buying, and you just bid them all against each other and pick the lowest price and go on. Like, what's so hard? Like, and not only what's so hard, it's like, I can't believe people actually pay a consultant to tell them that. Like, that's insane, right? Like I'll just go work for, I'll go work for McKinsey and I'll just do that all day. Like, okay, well, that's one option, but why resin buyers are unsatisfied with that approach, the 5-step sourcing approach, is simply because the players are not intuitively identifiable, right? So there's a huge portion of resin markets that are serviced by distribution companies. And we've seen time and time again that when big C consultants come in and do like RFP, they end up trying to figure out, where M. Holland's manufacturing plant is located.
Yeah, where is it located, by the way?
You know what? I'm touring it the second Tuesday of next week. Doesn't exist, by the way.
Yeah.
So M. Holland makes
only one Tuesday.
M. Holland does not make resin. They help deliver it. They negotiate it on your behalf or against you, but that's not a player that's manufacturing the actual product that you're purchasing. And many of those players that manufacture those resins don't even want to talk to their end customers because they're controlling. They're trying to direct traffic on hundreds of millions, billions of pounds of resin. And somebody who's trying to get a quote for 1 million pounds or 500,000 pounds, you might think, hey, we're spending $1 million on resin here. Shouldn't we be treated pretty well? And then you zoom out and see what your producers are dealing with. And they're like, we don't have time to take your phone call. So that's going to really put a wrench into your RFP machine if the people selling this product aren't even interested in talking to you, let alone filling out an 8-page requirement and NDA and all of the different steps that it takes to often fill out a modern RFP, right?
Sure.
So what's the solution? How do you fix that? To me, it's fixing it by being focused on relationships, by understanding the supply landscape and the actual flows of materials through producers from production plant to producer to distributor to your customer and even to your customer's customer, right? Understanding those material flows already puts you in a much better position to succeed in finding competitive alternates. After that, then it's also making sure that you're not going to your supplier and forcing them to rebid on stuff that they're already servicing, right?
Yeah.
I mean, we've seen that before. Then RFP comes out, the sales guy picks up and says, "Hey, I saw some of these new lanes on here. This is pretty good info. We'd love to bid on those. Oh, but by the way, I also saw 8 of my own. Do I need to rebid on my own?"
Am I competing against myself here? What do we do?
Right. And that's also a bit of a signal to that resin seller that maybe the buyer's not very detail oriented or paying super close attention. And what does that result in? That results in a sales guy who smells margin and he's going to respond on that, or she's going to respond on that RFP with a slightly inflated price because they can tell, oh, they're just fishing. They're just out there looking. And I know that, the same salesperson at CPA is going to respond the same way as the guys at M. Holland, is the same way as the next competitor. So only once you can get that level of competence and trust in your salesperson where you're able to say, hey, listen, I know what this material is. I know where it's made and where it's come from. And I know that you deliver it. And I know where your margin is made. And I know what freight's doing. And I have all this information. I'm just asking you for your best price to service that lane. That's when it clicks like, okay, this person really knows what they're talking about. If we want this business, we need to be aggressive. I'm going to go talk to my boss and make sure that we can hit that price and drive that value.
So I want to kind of expand on that. So the price we talk about is everybody is foremost important, right? To get the best price or a market price that is fair. Overall value. How many suppliers or processors actually go out there and do supplier assessments and assess their quality of their supplier by response time, quality, a lot of different metrics, and support? Do they answer an email or phone within an adequate amount of time? There's so many other forms of value that go in there along with price, which is very important. And that's just a good business practice that I think a lot of suppliers or processors don't always do. They just assume that because you're a legacy supplier and you've done a good job, that you're going to continue. But do they really know you're doing a good job? Or is that just how they feel? So getting data, putting it together and saying, oh, you're on time and complete for a lot of our orders has been pretty good. Or no, it's really not that good. It's been kind of masked by some other aspects of the relationship that are took forefront on what we think of.
Never a bad time to do a supplier assessment. Definitely agree with you there, Kevin. The other thing I can't help but keep going back to the consultant, maybe just because I've had a lot of conversations lately with folks that have worked with other consulting firms, had negative experiences, and are looking for some help. But another one is where you aren't taking into account business objectives as a company, and maybe a recommendation of just buy a little bit more material. Why don't you fill that truck up and we'll bring in the truckload price, and yeah, I got my 10% target savings when, hey, my facility can't take that truck, or I have got working capital goals that, I'm going to miss that part of my bonus if I do this. Like, I feel like that's another area where a lot of firms get it wrong with recommendation.
One other thing I wanted to mention, because earlier, if you've been listening to the whole podcast, I said that 75% of historical value delivery has been on qualifying and moving alternates, right? I want to go back to that and say that is the most powerful lever, but sometimes just the perception that you're able to change drives a ton of value across your whole portfolio. In the past, that was a play that I ran where I qualified one of our larger resin SKUs with an alternate. And at this company, I guess I'll say they had gotten very comfortable with just doing an RFP and then just beating down the incumbent. And over time, if you just keep running back to that play, over time, your ability to claw back any margin, it only gets closer to zero. So in that role, when we qualified an alternate material and we saved a bunch of money, I made sure that every one of my resin salespersons knew it. Hey, there's blood in the water here. We can move. We will move. In fact, not only will we move, if you take this RFP seriously and you win, I promise you that I will move the volume regardless of what my current supplier will do. We will not give the incumbent supplier a second chance. That drives a whole different level of price response from the supplier. So if you have that credibility that hey, we're going to change, and do you want to be a part of it? And then following through on that and having the integrity to get it done, you might only need to move 1 or 2 resin SKUs to impact 50.
Shot across the bow, right? Show that you mean business, that you have teeth.
And along with that, just be comfortable with those uncomfortable discussions, because over time, that comfort level, the relationship has gotten to the point sometimes where you don't want to have that, but you don't really see the value because you're not comfortable about having those discussions in a very frank way and fair way, both sides.
And understanding, you as a customer, understanding how does your buyers see you? Are you perceived as somebody that's nimble and agile and not very loyal, or are you perceived on the far other side of the chart of being overly dependent and absolutely unwilling or unable to change, right? So if you're perceived as one of those two things and you're able to quantify that and kind of know that, then you're able to derive a little bit more insights on how you're likely being treated and where that margin is likely being left on the table.
Excellent. Excellent point. Well, listen, it's been great spending some time with you guys, kicking around some of the major topics in resin and that our clients are talking to us. It's been great spending some time with putt golf. We've had some good meals and just the camaraderie and planning for this year. Really excited about getting out there with you guys in 2026 and beyond, and helping our clients continue to save money but also optimize their procurement operation. Everybody have a great rest of your week, and we will talk to you soon.